But our next guest is warning there are still serious barriers in these negotiations before we get carried away. Derek Scissors is the Asia economist at the American Enterprise Institute. It's great to have you here. Welcome.
Thanks.
So how should we be thinking about this? How are you thinking about it going into the weekend?
Well, there are two good signs. The first one, obviously, they're having talks, which was a surprise until 6 p.m. last night. And second, that Secretary Besson is meeting with He Feng, who is a senior person in the Chinese government. The Chinese could have said, OK, you can meet us with a technical person, a vice minister of commerce. And they didn't. They went to a very senior person in the government. So there's the possibility that they can discuss important issues. Against that, we've seen both sides spend the last few weeks saying, oh, well, they want talks, not us. And it's very childish, really, with all that's at stake. And so if both sides have to come out saying we won, that makes it much harder. So the first thing people have to realize is it's not just Donald Trump who's prickly. Xi Jinping, the Chinese General Secretary of the Communist Party, is also very prickly.
I think it's interesting what you say here, that there's almost too much focus on tariff levels. Is this playing into, are both sides doing this intentionally? Because I heard this directly from a source last week, that they're cutting deals with the Chinese to get exemptions on imports of U.S. products, because that the Chinese know would harm their economy if they tariffed at levels that the headlines would imply. How much of this is going on, behind the scenes, where there's actually a lot of exemptions on their end, I don't know about on our end, that are kind of the real story while we're all having this headline fight over what the tariff rates are?
That's exactly right. And it matters whether the talks succeed or fail, right? So everyone's focused on the talks, but the exemptions happen before the talks, and they could happen after the talks. The Chinese are talking to their firms about, well, what do you really need? Well, we just won't count that. And they're not going to publish a list because it would make them look like they need stuff from the U.S. The U.S. has already said, well, semiconductors and consumer electronics, we won't count those. And we're going to have separate sector investigations, and they won't get the 145% tariffs. And we're going to mess around with entry to kind of avoid problems where we don't check too hard if goods are coming from China through another country. So both countries are, in a sense, preparing for a long trade war with high headline tariffs.
Exactly.
But it's not a real trade war because the high headline tariffs are somewhat fake.
So what is actually going on here? So if I'm the market and I'm digesting this, and you've made other points, too, about how much of the shipping is now going to happen through third parties. There's countries like Malaysia, which are fully gearing up for this. The de minimis exemptions, well, if I were the markets, I would say, well, there's not a real there. Maybe there's a big geopolitical issue. Maybe there's a Taiwan issue lurking in the background. But as far as I'm concerned about the practicality, maybe it's less than meets the eye.
I think where I would go with the market is the low-end risk is actually not that bad. Because let's say these talks break up and they say, oh, you gave in, no, you gave in, and nothing happens. Both countries are already taking steps to minimize the sting of the tariffs. They will take more of those steps. That doesn't mean they won't have any effect, but the disaster won't occur. Meanwhile, on the other side, it's hard to see high-end gains because you'd have to have a deal between two prickly egos that cover a lot of topics and that lasts. I can imagine a deal, but I can also imagine a year from now the U.S. trade statistics looking bad and Trump blaming China. Deal goes away.
And in other words, so if you had to bet on one outcome or the other, would you be more likely to bet on the outcome of status quo? And I know we're seeing some revenue collections. But we're hearing this rhetoric about a practical embargo between these two countries. Is that really the case?
I don't think so. Certainly, the tariff levels say there's a practical embargo. For some goods, there'll be a practical embargo. But for other goods, as you mentioned, they'll just get shipped through other countries, and we just won't check very hard to see where they really came from. Other goods will get outright exceptions. Oh, well, this is a sector tariff of 25% instead of a country tariff of 145%. That's completely different. So I don't think the outright embargo will apply, whether the talks succeed or not.